Hi everyone. We've read through the concepts under Ind AS 10, which is events after the reporting period. We would now like to apply those concepts with the help of several questions to test our knowledge on this topic. We are provided with the information about a company. It says that Success Limited follows 31st of March of year end. It has declared interim results for the quarter ended 30th of June 2021 on 12th of July itself. Till this date, the AGM for the year ended 31st of March 2021 was yet to be held. The management of Success Limited approved the financial statements for the year 2020-21 on 26th of July 2021. The question is, consider the above, which period should be considered as after the reporting period under Ind AS 10? Now, importantly, friends, you would like to remember, the concept itself suggests that if this were my reporting date, right, any event up to the date of authorization, right, would be my event after the reporting date. So essentially, the question that should always trigger back on your mind is, what is my reporting date? In the given question, we are provided the year end is 31st of March 2021. So if it's 31st of March 21, and we are also provided with the information that the approval was done on 26th of July 2021, right? So that is 26th of July 2021. So any event between these two dates shall be considered as an event after reporting date or event after reporting period, whatever you want to call it. Okay, so when I look at the question's requirement, consider the above, which period should be considered as after the reporting period. We can safely say that up to 26th of July 2021, my period shall be considered as the event or the after the reporting period would be considered from that perspective. Now, essentially, you have conducted, you have declared the results for the quarter ended 30th of June on 12th of July itself, which simply means that this could probably be my date of 12th of July when those interim financial results have been declared. Now, this does not impact the after the reporting period perspective. So even if I'm doing an interim reporting for the next accounting period, it has no bearance, it has no significance from the coverage of what is my after the reporting period from this particular standards perspective. All right, that's how you start, understanding the concept and applying it in the real life from this perspective as well. All right, let's have a look at the formal solution around this. It says that declaration of interim results does not have any impact. Right? That is something that we have been talking about. Does not have any impact on the determination of the period for evaluating the events after the reporting period. The period between the end of reporting period and the date on which financial statements are approved will be regarded as the after the reporting period. Of course, in this scenario, the period between 31st of March 21 and 26th of July 21 will be considered as after the reporting period. All right, we are provided this question where it says that Winner Limited follows year ended 31st of March. The company has an ongoing case in High Court against the GST department. The tax department has given a show cause notice for some of the exemptions or inputs claimed by the company. The High Court has issued a final order on 2nd of May 2020 that is in favor of Winner Limited, resulting in the reduction of tax liability as on 31st of March 2020. So the order has come on 2nd of May and the reporting year is 31st of March 2020. The management approved the financial statements on 30th of May 2020. Since the court order, the further information provided is, since the court order was favorable, the management of Winner Limited is of the opinion that this should not be considered in the financial statements as it will affect the realization concept of accounting and hence no adjustments are made. The question asks us whether the understanding of Winner Limited is correct as per Ind AS 10. Now, friends, in this scenario, there are two aspects that we need to understand. One is there is an event that has taken place wherein there's a reduction of a tax liability. Of course, after the reporting date, the question is that whether this event, first of all, is a part of an event after the reporting period. That's the first question. And second perspective, which the management takes, is that since it's a favorable event from a realization concept, from a prudence concept, right? They do not want to bring it in the financial statements as it would showcase that as on 31st of March 2020, it appears to be an income of the future which they want to show. That is where the question is coming from. So we need to address both these aspects. Okay, so let's try to understand first of all whether this event is a part of the event after reporting period or not. Okay, my event after reporting period suggests that anything or any event that takes place after the reporting date and the date of authorization of the financial statements will be an event after the reporting period, right? So when I look at this question, my reporting date is provided as 31st of March 2020. Okay, and my approval date comes as 30th of May. So let's write those dates as well. That is 30th of May 2020. So anything that happens between the two dates will be a part of my event after the reporting period. Now, this final order has come on 2nd of May, which probably is somewhere like this, 2nd of May. Essentially, this becomes an example of an event after the reporting period. All right. So that's where the first question is addressed. The second question is, and that's where the management contention is coming in, the management is of the opinion it should not be considered because it affects the realization concept. Now, importantly, what you need to remember here is that the definition of event after reporting date, a reporting period, suggests that all events, favorable or unfavorable, all events, favorable or unfavorable, which occur or arise after the reporting date and before the date of authorization are considered to be event after the reporting period. Now, the next context that comes is that whether this event is an adjusting event or non-adjusting event, right? And that's where we say that the circumstances exist. The circumstances exist on the reporting date that such an event can take place. Of course, there is a, so let's go back to the question. There's a question, the information provided says that it has been an ongoing case. It has been an ongoing case for the company, Winner Limited, which means that on 31st of March 2020, those conditions or circumstances existed that this event can take place, which simply means that this is a classic example of an adjusting event, which means that the company has no choice but to adjust the financial statements for the year ended 31st of March 2020. So the management cannot take a view that it is going to be a future income. So let's not report that. That is nothing which is not available to the entity as such. That means that you are going to report it since it's an event after the reporting period, and then you're going to also adjust your financial statement because this event is an adjusting event under the purview of Ind AS 10. All right, let's have a look at the formal solution around this topic. It says that as per Ind AS 10, both favorable and unfavorable events after reporting period are to be considered. Now, as far as the event is concerned, it provides evidence of conditions which existed on that reporting date. So accordingly, we shall adjust the financial statements, right? And that's where the conclusion is. Hence, Winner Limited should adjust the financial statements for the impact of the court order. All right. Now, we are provided this information. It says that Tablets Limited is a distributor of computers and related accessories. On 31st of December 19, the company had 100 laptops. Okay, on 31st of December 19, the company had 100 laptops in its inventory with a cost of 50,000 rupees each. Okay. Tablets Limited had valued the inventory at rupees 50,000. Again, it's the same, the cost which is being taken for each such laptop. Subsequently, on 20th of January 2020, the price reduced to 42,500 rupees because of advanced version of same series of the laptops. Now, the directors approved the financial statements for the year ended 31st of December 19 on 13th of February 2020. Okay. Tablets Limited is of the view that the event leading to reduction of the selling price has happened post the reporting date and hence the management does not intend to revalue the inventory at the price which is 42,500 rupees, which is basically your net realizable value considering those costs to sell as well, right? So we are given, of course, the cost, which is 50,000, net realizable value, which is 42,500 minus any cost to sell, right? The question is whether the treatment by Tablets Limited for the closing inventory is correct as per Ind AS 10. Now, bear it in mind, it is not asking us to look at Ind AS 2. It is asking us to look at, of course, from Ind AS 10 perspective. Again, Ind AS 10, which is event after reporting period, the way we proceed, we look at the reporting date and, of course, date of authorization of the financial statements. Any events between these two dates are referred to as events after the, all right? So if I really go back there, my reporting date is 31st of December 19 and my date of approval is 13th of February 20. So there is going to be 31st of December 19. This is 13th of February 20. Okay. Now, between the period, of course, there is a date referred, 20th of January, the price have reduced to 42,500. So we're saying somewhere here, probably, we don't have to really go on a scale. So we're saying 20th of January 20, there is a trigger. There's an event which is reduction in the price of the inventory. There is a reduction in the price of inventory to the extent of 42,500. Now, essentially, this trigger is there, which is suggesting that it is indeed an example of an event after the reporting period. Okay, so how do we treat that? Of course, the management's view is this, that since this has happened post the reporting date, so there should not be any adjustments made around that. Okay, now what we need to remember here is that under Ind AS 10, the event of the reduction in the value of inventory suggests that there is an evidence of, so this is a clearly mentioned example or an instance under Ind AS 10, that reduction in the value of inventory suggests that there is an evidence of reduction in the value, okay, that existed on the reporting date, that such inventory has a reduced value. In simple terms, we are trying to say that this reduction becomes a part of an adjusting event because the circumstances exist on the reporting date that the inventory may have a reduced price. We talk about something which is near to or closer to the reporting date, where of course any reduction in price is expected to be also lying as on the reporting date, which simply means that the company, which is Tablets Limited needs to remeasure its inventory at 42,500 less cost to sell and charge the difference between cost and net realizable value to statement of profit or loss. Charge the difference. That becomes an expense. That becomes a period cost straight away. Should be charged as an expense to the statement of profit and loss there. All right. Let's have a look at the formal solution in this case. We are given that as per Ind AS 10, the sale of inventories after the reporting period may give evidence about the net realizable value at the end of the reporting period. That's what we have been trying to say. It says that reduction in the value of the laptops post the reporting period should be treated necessarily as an adjusting event as it happened before the date of approval, and accordingly the value, which is cost or net realizable value, whichever is lower, has to be reported in the financial statements by Tablet Limited in this case. All right. Thank you very much.